Thanks a lot for investing in DSP Global Innovation Fund. It's been exactly 1 year since we launched this innovative design in the Indian market. And we are very grateful to the 75,000 plus investors who've been a part of this journey. Sahil, do you remember the time when we launched this fund? There were a few challenges. There were a new regulations that were coming in, and it looked like a risky space for innovation and tech as a theme. So can we just look back to 14th Feb 2022?
Sure, Ankita, I remember it was a turbulent time, and there was about a 20-25% correction which had happened in international technology sector on the whole. And we had to, we were delaying to launch a strategy which will focus on this segment because there was a lot of valuation fraud. And eventually what worked is that we decided that this should be a SIP ki NFO, SIP ka NFO, which means that we recommended people to get into this strategy through a systematic investment plan, which will help them stagger their investment over the year. That I think worked really well. And second thing which I remember very clearly were the sky high valuations at that time. Nasdaq was trading at maybe 35, 37 times its earnings, which is very, very high. And since then, things have aligned. Many stocks have declined significantly. But what has worked is that many stocks have also done well over a period of time. So it's been a mixed bag for this strategy. But overall, in the last 1 year, I think it has come out really, really well.
Yes, Sahil. And continuing with the look back, at that point, we decided that, just holding large caps in tech space doesn't make sense. So we decided to go beyond fantastic. And that's why how the structure of the DSP Global Innovation Fund was created. We decided to diversify it and hold 3 types of business: the dominators, which are already the well-established companies, the enablers, the companies which help tech space to function, such as semiconductors, which is the enabling component. And finally, the disruptors, which are the new age companies bringing about a change and innovation in the sector. And we decided to give weighted, exposure to all 3 types. There were certain caveats that we had in mind. One, like we did not want to participate immensely in unprofitable companies. Okay, so when we looked at disruptors, we made sure that there is a component of profitability, and we achieved later through BlackRock Next Generation Technology Fund. So Feb 2022, because of the regulations, we launched this fund as a mix of NASDAQ and SOX. As you said, valuations were very expensive back then. And when we got valuation comfort, we started adding our active managers as well. We have 2 active managers who are part of this fund. One is the Blue Box Global Technology Fund, which is run by William Gale, who is incidentally the best performing tech fund manager globally in last 3 years. And the other is the BlackRock Next Generation Technology Fund, ran by Tony Kim, but is known to be cautious of profitability while investing in innovative tech companies. So that's the current structure of the funds. We have 4 broad, funds that it feeds into: 2 active funds, 2 passive indices. Active funds, as I said, being Blue Box Global Tech and BlackRock Next Generation Technology. Passive indices being Philadelphia SOX Semiconductor Index and the NASDAQ 100 index itself. Again, the fund, apart from diversifying across types of business, across active and passive, also diversified across market caps. So there is large cap, mid cap, and small cap all in one fund. And that's how we thought is the best way to hedge against the risk in this space and diversify well enough to for it to benefit our investors. Now, Sahil, I remember we started saying that, one should invest via SIP. Would you continue to recommend that at this point? I think 70% of our investors came through SIP route, and 100% of them have stayed. So do you think the strategy played out for them, and what would you recommend in future?
So more than recommendation, Ankita, I think there are a lot of learnings for the investors who have come in DSP Global Innovation Fund. And I would like to, thank them and also learn from them how to be disciplined. And as you said, nearly all of the investors who came in through the SIP route in this fund have stayed. And when you compare that, and when you look back in last 1 year, what has happened is that out of the 76,000 investors that we had in this fund, uh, roughly about 50,000 investors or so, 3/4 of all our investors came in through SIP lump sum. And if you look at the returns until 14th Feb 2023 today, yesterday, their returns are about 8.1% on a CAGR basis for SIP investors, which means that in a sector, in a market, when you look at the overall indices and the sector itself, NASDAQ fell about 33-35% last year, and then it later recovered. And it is still down, right? Down more than 10% or so. But these investors who stayed through the course and were very, very disciplined, they ended up with a better outcome largely because of discipline. And secondly, because they know that the overall theme continues to be very, very attractive over a period of time. So I would still recommend that this is the most important and easiest route to participate in this sector, in this journey of global innovation, likely because we will see more volatility going ahead. And it's now clear that volatility is a friend of discipline. And that is what we will see even in the future. So yes, SIP route continues to be the most preferred route to invest in this type of fund. Also, Ankita, one more very important point for investors to look at is that this is the only space which has shown very strong earnings growth, profitability growth over the last 15 years. So there is a structural long-term trend which is in favor of this theme. And we believe that whenever valuations become attractive, this side of the market will become even more attractive from what it is today. But you should continue to do your SIP and continue to invest in this strategy.
Sure, Sahil. So I think two takeaways. One, that this has been a classic case where SIP and discipline has played out. So volatility is a friend of discipline, as you said. If we look at the returns, we see that SIP returns are much better than the lump sum returns. So classic case of discipline playing out and allowing investors to stay in the journey for longer. And secondly, as you said, technology is a secular juggernaut, and therefore one should continue to participate in that theme. Finally, Sahil, this budget had some implications on taking money out of India via LRS route. So from investments perspective, would you like to throw out some light on LRS versus the FOF route for investing?
So the taxation has been changed. Earlier, the TCS, the tax that you contributed at source was 5%. Now it is 20%. So if you're sending, let's say, $100 through LRS, earlier 5 rupees was withheld as taxes. Now 20 will be withheld. So your investment eventually at the beginning will only be $80, right? Which means that the other $20 will not make any return in the short term. So which means that if you want to participate in global equities or international strategies, the mutual fund route remains one of the most attractive, most tax efficient route for investors to look at. Also, I think it is cost efficient. So for Global Innovation Fund to get exposure to these smart managers globally who follow the first principles of investing and who understand where and when to allocate and how to navigate different market caps, I think there is a need for getting that exposure. And DSP Global Innovation Fund gives you that exposure. When you compare it to all other instruments out there, LRS or other instruments, this I think is a very a route which is cost efficient and which has very less friction. So that is what you should look at when you look at a 10-year, 20-year horizon of continued investing in this space.
Sure, Sahil. So I think FOF makes more sense from the tax perspective as well. I think we would again want to take this opportunity to thank our investors, all 75,000 plus investors who've joined us in this journey. I think we've made, because of the SIP discipline, this has been eventually a soothing journey, and we hope that you continue to participate with us. Sahil, any final comments?
Final comments is that all the investors who stayed through, who've been disciplined, they should be happy, or maybe even more happier, seeing more volatility ahead, because now they know that more volatility will allow them to purchase more units when markets fall, and eventually that will turn out to be a great investment journey over a period of time. And I will thank each and every single investor who came into this strategy. And I would urge you to continue to be invested for the long term. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.